Let's be honest. When you're drowning in debt, the worst part isn't always the numbers. It's the constant, harassing phone calls, the threats. It's designed to make you feel completely powerless, but you're not. In this explainer, we're going to give you a real-world guide to understanding debt settlement, shutting down the harassment for good, and actually finding a path forward.
So here's our game plan for today. We'll start by talking about the struggle itself. Then we'll get into what debt settlement actually is. We'll give you a step-by-step playbook for negotiating, uncover the risks you absolutely need to know about, arm you with your legal rights, and finally, help you figure out the best choice for your situation. Ready? Let's dive in.
All right, first things first. Let's just acknowledge the reality of this, because it's not just about money, is it? It's about the stress, the anxiety, and the pressure you feel every single day. You know, if this thought has ever crossed your mind, you are so far from alone. This is a real shared experience for millions of people. That constant pressure is a tactic. It's designed to break you down. But just recognizing it for what it is, which is harassment, that's the very first step to taking back control. And this right here, this is what that harassment actually looks like. We're talking about an insane number of calls, sometimes dozens a day. Calls super early in the morning or late at night. Even threats of sending the police to your door. They might try to shame you in front of your family, tell your boss about your loan, or demand cash right there on the spot. I want to be crystal clear, none of this is okay. In fact, most of these tactics are direct violations of RBI rules.
So with all that pressure building up, what can you actually do? Well, one potential lifeline is something called debt settlement.
Okay, so what is it in plain English? Debt settlement is a formal deal you make with the bank. Basically, you offer to pay a single lump sum amount that's less than what you technically owe, and in exchange, the bank agrees to close your loan account for good. It's really a last resort option, mostly for things like personal loans and credit card debt, and it usually only happens when someone is in really serious financial trouble. Knowing the definition is one thing, but actually getting a good settlement, that takes a real strategy. So let's get into the playbook. This is how you negotiate like a pro. All right, here are your 4 non-negotiable steps. Number 1, document every single harassing call or message. This isn't just for you, it's your leverage. Why? Because that log is hard evidence if you file a complaint, and banks hate dealing with official complaints. 2, know your number. Figure out the absolute most you can afford to pay, and then start your negotiation much lower than that. 3, and this is huge, get a formal written settlement offer from the bank before you pay them anything. And finally, step 4, after you've paid, you have to get that no-due certificate, the NOC. That's your final proof that it's all over. Now, I really want you to focus on this slide for a second, because the power of just a few words here is incredible. When you get that settlement letter, you have to look for this exact phrase, full and final closure. Seriously, without those specific words, there's a loophole. The bank could try to argue that you only paid off part of the debt, and they could come after you for the rest later. This phrase is your legal shield. Do not forget it.
Okay, settlement can sound like a pretty good way out, can it? But, and this is a big but, you have to go into this with your eyes wide open. So it's time for a little reality check. There are some major risks involved. The single biggest downside to a debt settlement is what it does to your credit score. There's just no sugarcoating it. Settling a loan for less than you owed is a huge red flag on your credit report. And we're not talking about a small dip. A settlement can tank your CIBIL score by 70 to 100 points. That's massive. A drop that big can make it nearly impossible to get approved for new loans, a new credit card, maybe even a mortgage for years. Your account will be marked as settled, which basically tells every future lender that you didn't fully pay back what you promised. And the risks don't stop there. Some debt settlement companies will hit you with all sorts of fees. Here's a nasty surprise. The amount of debt the bank forgives could actually be considered taxable income. You've got to watch out for scams, especially from anyone asking for money up front. And finally, just remember, the bank doesn't have to say yes. It's a negotiation, not a guarantee.
Okay, now that you get the risks, let's switch gears and talk about your protection. Because you do not have to just sit there and take the harassment. You have legal rights, and they're like your armor in this fight.
And the main authority in your corner here is the Reserve Bank of India. The RBI has a fair practices code that all banks and their recovery agents absolutely must follow. These aren't suggestions, they're the rules. And get this, the bank is directly responsible for whatever the agents they hired do.
This table lays it out perfectly. What can they do? Sure, they can remind you about your dues and contact you during decent hours between 7 a.m. and 7 p.m., but what they cannot do is use abusive language, call you at 11 p.m., or tell your entire family about your debt. They can't pretend to be cops, and they must always have proper ID from the bank.
So what happens if an agent crosses the line? Here's your action plan. First, like we said, keep that detailed log. Second, file a formal complaint directly with the bank's grievance officer. You can find their contact info on the bank's website. And make sure you get a complaint number. The bank then has 30 days to fix it. If they don't, or you're not happy with their response, you can then escalate your case to the RBI Ombudsman. And by the way, that's completely free to do.
All right, you've got the strategy, you understand the risks, and you know your rights. This all leads up to the final choice. Is settlement the only way out, or are there other options? Let's quickly compare it to something called loan restructuring. So here's the fundamental difference. Think of a loan settlement as a clean break, an immediate exit. You pay a smaller amount in one shot, and boom, the debt is gone. Loan restructuring is different. It's about tweaking the loan to make it easier to handle. So you might extend the timeline to lower your monthly payment, but you're still on the hook for the full amount, plus more interest over time. This table really breaks it all down. Settlement is probably best if you're in a deep, long-term crisis with no realistic way to ever pay back the full loan. Restructuring, that's for more of a temporary setback. With settlement, you pay way less money overall, but you take that huge hit to your CIBIL score. With restructuring, you actually end up paying more in the long run, but the damage to your credit score is much less severe. It's immediate freedom versus a longer but more manageable journey.
So, at the end of the day, it all comes down to this one crucial question. It is a trade-off. You're balancing immediate relief against your long-term financial health. There's no single right answer for everyone. But now, by understanding the playbook, the real risks, and your rights, you are finally empowered to make the choice that's truly right for you.